What's up, tech enthusiasts? Ever wonder what $100 billion looks like? Well, Amazon's about to show us. They're planning to drop that much on AI by 2025. That's not a typo, we're talking 12 zeros. Is this a game changer, or are they throwing money into a black hole? Stick around, because we're unpacking this massive investment and what it means for you, your job, and your portfolio. Seriously, this could be bigger than the dot-com boom. Or bust. Alright, let's get down to brass tacks. Amazon's ambitious AI plan is part of a larger trend. Big tech, we're talking Meta, Microsoft, Alphabet, the whole gang, is projected to spend over $300 billion collectively on AI in the next year. Amazon's slice of that pie is a cool $100 billion, primarily focused on beefing up AWS, their cloud computing arm, and developing their own AI chips like Trainium and Inferentia. They're betting big on AI being the next big thing, and they're not alone. This isn't just about fancy chatbots. It's about fundamentally changing how businesses operate and how we interact with technology. Okay, so $100 billion. What does that actually do? Think of it as a massive butterfly flapping its wings. The initial impact is in the AI and tech sector itself. We're talking hyper-competition. Everyone's scrambling for the best AI researchers, the fastest GPUs, and the most innovative algorithms. This drives innovation at breakneck speed. We'll see new AI-powered products and services popping up everywhere, from smarter Alexa devices to more personalized shopping experiences on Amazon. But it's not all sunshine and roses. This massive investment is creating insane demand for data centers. Amazon's building them like crazy to house all those AI chips. This likely leads to shortages of critical components, and you guessed it, increased costs in the short term. The talent wars are already heating up. If you're an AI engineer, congratulations. You're basically printing money right now. Salaries are skyrocketing, and companies are offering crazy perks to lure the best and brightest. Now, let's zoom out a bit. The ripple effects extend far beyond just the AI companies themselves. The semiconductor industry is booming. NVIDIA, AMD, anyone making GPUs or specialized AI chips is in for a wild ride. Think of it as the California gold rush, but instead of picks and shovels, it's circuits and transistors. Cloud computing is also going to explode. AWS stands to benefit massively as companies flock to the cloud to access the computing power they need to run their AI models. Data center construction and management are also huge growth areas. All those AI chips need a place to live, and keeping them cool is a major challenge. That's where companies specializing in energy-efficient cooling technologies come in. And don't forget about energy. These AI data centers are power-hungry beasts. This puts pressure on energy grids and increases the demand for renewable energy sources. Finally, Alphabet's investing in undersea cables? Seriously? Yeah, that's because all this AI needs bandwidth, massive amounts of it, to transfer data around the globe. Alright, let's talk about the elephant in the room. Us. What does all this AI mean for people? Well, first, there's the job market. AI will create new jobs, no doubt about it. We'll need people to build, maintain, and manage these AI systems. But it will also automate existing jobs. The big question is, will the new jobs outweigh the old ones? That's still up in the air, and it depends on how effectively we reskill and retrain workers. Productivity is likely to increase across many industries, which could lead to economic growth. But there are ethical concerns. AI models can be biased, leading to unfair or discriminatory outcomes. We need to develop AI responsibly and ensure it's used for good. And let's be honest, there's a risk of widening inequality. If the benefits of AI are not shared equitably, it could exacerbate income inequality. Access to AI education and resources will be crucial to ensure that everyone can benefit from the technology. Finally, AI will change consumer behavior. AI-powered personalization could lead to greater consumer satisfaction, but AI-powered automation could reduce the need for human interaction. It's going to be a brave new world, and we need to be prepared for it. Here's a real kicker. There's a new kid on the block called DeepSeek, and they're shaking things up. They've developed AI models that offer comparable performance to the big players, but at a fraction of the cost and energy consumption. This is a huge deal. It means that AI doesn't have to be a resource hog. Companies will be looking for ways to reduce the computational cost of AI, and DeepSeek is leading the charge. This could be a major disruptor in the AI market, forcing everyone to focus on efficiency. Time for a dose of reality. This AI revolution isn't without its risks. First, there's the technical risk. Are we over-investing in AI at the expense of other critical technologies? Are we rushing to deploy AI solutions and creating technical debt down the road? Are we becoming too reliant on specific AI models or vendors? Then there's the business risk. A $100 billion investment is a huge financial gamble. If Amazon's AI initiatives don't deliver expected returns, it could negatively impact their profitability and stock price. The AI market is also incredibly volatile. Amazon's investments may not be enough to maintain its competitive advantage. And let's not forget about talent acquisition. Attracting and retaining top AI talent is crucial, but the competition is fierce. Finally, there are the ethical risks. AI models can be biased, leading to unfair or discriminatory outcomes. Job displacement is a real concern, and advanced AI models can be used to create deepfakes and spread misinformation. We need to be aware of these risks and take steps to mitigate them. Speaking of risks, have you ever been bombarded with those annoying "Are you a robot?" challenges online? Well, that's a taste of the challenges of AI security. False positives are a major problem. Legitimate users being incorrectly identified as robots can lead to frustration and lost sales. The implementation of these robot detection systems themselves might have vulnerabilities that could be exploited by hackers. And relying on JavaScript and cookies creates a dependency that can be broken by browser updates or privacy settings. Plus, these challenges might not be accessible to users with disabilities. It's a balancing act between security and usability, and it's not always easy to get it right. So, what's the bottom line? Amazon's massive AI investment is a huge bet on the future. It has the potential to transform industries, create new opportunities, and improve our lives. But it also comes with significant risks. We need to be aware of these risks and take steps to mitigate them. We need to develop AI responsibly and ensure it's used for good. The fact that Amazon's stock price dipped after the earnings call suggests that investors are already factoring in some of these risks. This is a journey, not a destination. The AI revolution is just beginning, and we're all along for the ride. So buckle up, stay informed, and let's see where this takes us. What do you think? Is Amazon's $100 billion AI bet a smart move, or are they heading for a crash? Let me know in the comments below. And don't forget to like and subscribe for more tech analysis and insights. Until next time, stay curious,